Hi, my name is Bill, and today I'm going to answer some of your questions on reverse mortgages. During this video, we're going to be talking about how to qualify for a reverse mortgage, how much you can receive for a reverse mortgage, and how you can receive that money, the cost of a reverse mortgage, and what happens to the home when the last borrower leaves. The first question normally asked is, how do you qualify for a reverse mortgage? Well, there's quick answers and long answers. We'll do the quick answer. Anybody on title must be 62 years of age or older. It must be your primary residence. The house must meet the minimum standards of the HUD requirements, and you will have to undergo a third-party counseling from a government-sponsored counselor. The counseling is there to ensure that, number one, the loan officer you speak to is not trying to tell you anything wrong, and that you understand completely the reverse mortgage. The second question asked is, how much can I receive from a reverse mortgage? The amount you receive is based on the age of the borrowers. Obviously, the older you are, the more money you will receive. The value of your home, the higher the value, the more equity you can use out of your home. And it's also based on the type of loan and the interest rate you choose when you receive the reverse mortgage. There are different types of loans, and we can get into that at a different time, but the ones you need to know about are the adjustable and the HECM fixed rates. And depending on which one you choose is the amount you will receive from your reverse mortgage. The next question is, how do I receive this money? Well, there's all kinds of different ways you can receive it. One, you can do a lump sum, which is you receive all the monies upfront, cash, directed into your accounts. You can receive monthly payments paid by the lender. You can put the money into a credit line and use it when you need to, or you can get a combination of all three of these. The good thing about this is all the monies you receive from a reverse mortgage are tax-free and can be used for whatever purposes you, the borrower, want. Like, you can use the monies to pay off medical bills. You can make home improvements, roofing. You can pay off credit cards if you want to reduce your monthly payments. You can buy a car, go on a trip. Your possibilities are anything you think of. The next question is, how much is this going to cost me? The cost of a reverse mortgage is going to vary from person to person. The fees that you may pay, you may have to do a HECM origination fee, federal mandated mortgage insurance. You will have title insurance, escrow fees. Everything that goes with a regular mortgage is also included into a reverse mortgage. You also have the option to roll these fees into the loan or pay them up front. Okay, how are you going to know when it's time to repay the loan? Well, it's going to be time to repay the loan when the last living person either moves out of the house or passes away that's on the loan. You may go into a repayment status for any of the following. You stop paying your property taxes, and that is something that's been in the news lately, people losing their homes due to not paying property taxes. But this is just like a regular mortgage. There's no difference between this and a regular mortgage. You still have to pay your property taxes and your homeowner's insurance. You could also lose the house or go into a repayment if you're injured and you go into a convalescent hospital for longer than 12 months. As long as your prognosis is not ever to come back to the house, they won't work with you on that. And obviously, if the last borrower passes away, and then the loan will come due. How this affects your family. There's good news to this subject. The reverse mortgage is a non-recourse loan, meaning your family will never owe more than the fair market value of the house. But your family does need to be aware of how to proceed when this happens. If your heirs have no interest in the home, then they can walk away from the home, turn the property over to the bank, and no balance is due, and your estate and your heirs are free and clear. Let's go a little bit more in depth into the last subject. If your heirs are interested in keeping the property, they need to pay back the full value of the loan. As I said before, it was a non-recourse loan, which means that, say, we'll throw some numbers out. Say your house is valued at $250,000 and your loan amount is $300,000. In order for the heirs to keep title and ownership of the home, they would have to pay back the entire $300,000. If they choose not to do that, then they will only owe $250,000 on the home, and they can either sell the home and pay it back, or they can just turn the property, as I said, back over to the bank and walk away from it, and there are no tax implications on either the heirs or the property. Okay, how are you going to decide if a reverse mortgage is good for you? Well, you can only do that through knowledge and education and finding out that a reverse mortgage is a tool for your retirement. You can get the knowledge and education through a loan specialist who specializes in the reverse mortgage. You can also use a financial advisor or tax consultant. Either of these people will be able to give you the education and knowledge that you need to make this crucial decision. Thank you for listening to this. I hope you enjoyed it. I hope it gave you some information and some education. If you have any questions, you can email us at reversemortgage@weblender.com or give us a call at 1-888-808-8486.